All right. Well, good morning, everybody. It's hump day. We're halfway through the week. So, with our normal routine, we want to come over and take a look at something like FX Street or Finance Juice, something that can give us a list of economic events for the day, which is what we get here on the left side, and preferably a place that'll give us a list of speakers. Now, the one that we're looking at is in my time zone. It's 1 hour behind the market. So you definitely want to pull up this same app for yourself to see, where these things land in your own time zone. You can see that Powell is scheduled to speak, but this is not supposed to be like a policy event. It doesn't mean that he can't put his foot in it, but for the most part, we have no expectations that he's going to, cause any significant ramifications within the market. Oh, I gotta move my stop up a little bit here. NASDAQ made a nice little bump to the upside after I started streaming, so get my stop moved. Boom, boom, boom. All right. So we got Powell, and then we have Powell, Lagarde, and Bailey all at one event. We can see later on each one of them, Mullard, Miser, and Lagarde. So it's a full house of speakers today. You got to be aware of the possibility that these people can really stick their foot in it, right? Um, for the most part, they're going to have speeches already written out. They've got a very clear idea of what they want to say. It's more about question and answer time afterwards. If reporters get them a gotcha question or something like that, then it can. That's where we have the potential to really see things go off the rails. One thing I did want to point out before we get too deep is that there is a new Bitcoin product out there. And I'm only bringing it up because of what it offers. Everybody was really excited when the minis came out, or the minis, because an ES futures contract, a full ES futures contract, is massive. So then they had the mini, and the mini was still really big. And so then we got the micro, and that was great because the micro offered people with smaller accounts a chance to trade. But there's still been people who said, well, it in the current market, even a micro is this monster that moves around for their little account. Well, now we've got these nano futures, and I've got one here. This is the nano Bitcoin. It's BIT. This thing requires like $25 in margin buying power, and it makes 5 cents per tick. So, when we're talking about something really small to trade, this thing is really small. And yet, if you're learning how to trade, if you're trying to trade on paper, you're wasting your time. I mean, just call it what it is. You can sit there and play around in paper money all you want, but with no skin in the game, unless you've gone through some course that teaches you exactly how to utilize that paper account in a way that may benefit you as an improving tool, it's not going to be an improving tool. You still need to trade live in some way. Think about trading these new nano Bitcoins. You're not going to make any real money. Like I said, it makes 5 cents per tick, right? So, you're talking, hey, I made $1. Yay, I made $5. But it's actual real money that you have in the market. So you do have skin in the game rather than just, paper trading. And And you can use this for a tool to perhaps help you learn how to trade, right? Or at least offer you some opportunity to improve without having to trade something big enough to hurt and without sitting there wasting your time paper trading. So just something to think about. It's a new product. It is Bitcoin. So the idea of being able to trade Bitcoin, if you want to trade the Bitcoin futures as a day trader, you need, well, it was let's see, $300,000. So drop that down. We can do the math real quick. You need a lot of money. You need a lot of money to be able to trade Bitcoin futures. Here's the Bitcoin futures. If you go to the futures tab, you need $48,262. And that is before we do the contract cut, right? You need a quarter of this size to day trade Bitcoin futures. So 25% of 48,000 is what you need per contract. Now, obviously, a lot of us have that, but that doesn't mean I want to tie up all my capital to trade it, right? So there is a mini Bitcoin futures. Obviously, it wouldn't require this much. I think it's like $700 or $900 to day trade a mini. But trading that, you may as well just trade the micro on the S&P or the NASDAQ. So these nano Bitcoins are very, very small and will allow you to perhaps teach yourself how to trade or get in there and start trading with real skin in the game, even though that skin may only be a nickel or 50 cents or, you know. So I just want to point that out there. New product came out, right? Obviously, new products are a little rough when it comes to liquidity, right? But this thing is traded 10,000 times today. So, I mean, it's got more liquidity than the Smalls exchange and the Fair X exchange does. And that, that kind of says a lot. So, cheers, right? Just let it ride. And we'll move on with the morning briefing. Just wanted to point that out there, guys. You know, um, and somebody was actually sassy enough to start talking trash on it and saying, well, that's a joke. Well, waste my time. I've got the 25,000. I'll just go trade Bitcoin futures. Fine. Nobody's saying you can't, but we're constantly going out of our way to help educate newer traders and point out things that can help them. And trading paper it's a waste of your time. Right? It's a joke. I spent 3 hours on paper last night learning a new broker. That is when paper comes in handy, right? Learning a new broker where the buttons are all over the place, nothing is working the way you think it's supposed to work. That's a perfect time to use a paper account. Learn how to push all the buttons, break things. I was getting in and out of trades on accident, screwing everything up, but that's exactly why a paper account is beneficial. Learning a new broker, not sitting there pretending that trading on paper is somehow going to help me become a better trader, because it won't. Not without some real guidance and structure behind it. So what do we got for today? Well, we want to focus on inside days and inside day breakouts. It's what we always focus on. It's a good place to start. The easiest way to see that is to come out to the daily chart. Yesterday was a reasonably decent size candle, right? And we keep flirting with breaking out of the bottom of that candle, but we're still inside this greater candle from last week, right? So we're still inside of that range. This is like a Busby after that bear pennant breakout, right? If we kind of line it up there, we had resistance. We kept hitting that resistance and then we finally broke through it. Well, when price breaks through resistance, it oftentimes pulls back and validates that old resistance as a new support. That big long sentence right there is why I came up with the word Busby, just so we don't have to say that big old long sentence. So this could be a Busby. And then from there, of course, we would expect, a little bit of a bounce and then a run to the upside. Now, it only owes us back to 39.50. If we get more than that, hey, great. But when you're trying to calculate your risk to reward on a Busby, whether it's a daily chart or an intraday chart, because Busbys are anywhere, it only owes you back to the top. Anything more than that is a benefit, right? It's extra. So it's always a simple calculation for identifying your risk to rewards. Since we're on the daily chart, let's just stay there for a minute and take a look at where the weekly expected move is, because we hit it this morning. 38.1475. That is where the low end of the expected move is for this week. Now, if you hand draw your expected move lines, it's not there. This indicator does a really good job of approximating where that expected move is. But at the end of the day, hand drawing the lines is more accurate. Will it matter? Not for us, it won't. I promise. It's close enough. And I'm not normally a person that likes to snuggle under the word close enough, right? In the oil field, close enough to get you killed. But this will do. All right. So what we want to identify here is, are we going to stay inside the box? Generally speaking, the S&P stays inside the box more than 80% of the time. And that is where our edge usually comes in. But we're in a very violent market. And we were counting how many times we stayed in the box yesterday during the Option Omega webinar. And we've actually failed to stay inside the box at the end of the week 7 out of 10 times in the last 10 weeks. So we have a 30% chance of being in the box at the end of the week right now. Those are some horrible numbers. You're almost better off running a gamma iron at that point. If you don't know what a gamma iron, that's where you buy the iron instead of sell the iron, right? Yeah. You've been there, you did that. So what's the expectation for today? Well, if the structure holds underneath our current market location, then the idea is that we're going to try to maintain inside of yesterday's range. That's kind of the idea. Like, hopefully we can do that, right? But we need to get back inside the range first. So as you can see, we as I'm streaming right this moment, we are crossing back inside of yesterday's range, just barely. The dominant thesis is we're going to hold the range today, that we're going to come back inside of yesterday's price action, maybe work a little bit to the upside, but mostly just not continue to go lower from here. That's the dominant thesis. There is some econ on deck, however, that can kind of throw a wrench in that. One, we have all those Fed speakers today coming out, chipping their teeth. But then we've also got GDP and we've got CPI. The investors' confidence index, I mean, in the current market, things are just crazy enough that even something like that could be impactful. We have the petroleum report, and there's a lot going on the earnings side. Japan just issued a new warning on power supply shortages. It's the fourth day in a row. So power supply shortages, warnings coming out everywhere. The US dollar, Japan, the TNX, the DXY, WTIC. I mean, we got this whole energy thing going on at the moment. So while normally we kind of shake off the 1030 and we say, it's not, it's not going to be impactful. It's just another report. Not today. Today, I would say, hey, keep your eye on that 1030 time frame and be ready for some fireworks. We could absolutely see a change in market structure when this petroleum report comes out. The last two are going to be, in the Globex tonight. They're not an issue for us to deal with through the day today. So we're talking 8:30, 9, 10, and 10:30. And then past 10:30, we would be looking here on Finance Juice and keeping track of any of these speakers. Remember, these are not market times. So if it says 10, it means 11. 10:30, well, that's 11:30. And 12:05, nah, it's really 1:05 in the afternoon. So we do have afternoon worries, right? It's a good way to kind of focus on it. When we look at the European market wrap, we can see there's still a lot of concerns about monetary policy. I mentioned it yesterday. Christine Lagarde was calling for like 25. She's holding her guns. She drew a line in the sand, and other people are kind of nudging her, perhaps suggesting that 50 would be a better way to go so far. And she got kind of snippy about that last month when somebody asked her about this, and she made some backhanded comment about I mean what I say, and I said 25, and that's what we're going to do kind of statement. Now, it's easy for her to say that a month ago when the data wasn't where it is now, but that has a lot to do with what we've been seeing this morning. So, it's 12:45 in London right now, still middle of the day. She's got this event going on later today. There could be some signal, right? The little wink and a nod that she's going to uh, back away from that 25 line and lean into the 50 with her cohorts. And we see that, and it could get a little rowdy. The entire Europe market wrap has been focused on that today. So, you may want to go over and look at something like Bloomberg's 5 things you need to know, perhaps to get a little better insight on anything else that may be popping up. Now, when we think about linear regression, mean reversion, the things that got hit hardest yesterday, if we start to see a reversion today, things that were hit hardest yesterday are likely to pop up today. And anything that was up yesterday is likely to drop off today. That's just the way the markets move, right? Simple market logic 101. Now, that doesn't mean that you should just run out and buy everything that was down yesterday. Obviously, no, that's not the way we do it. We could still get a continuation farther away from the mean. But if we're looking for a capital rotation in a mean reversion market, that's exactly what we would anticipate. That what dropped yesterday is going to pop today. That would be tech. So here's where they're talking about that panel discussion. And it's a full house. We got Miser, Bullard, Powell, Bailey, the guard. They're probably all sitting around eating cookies and talking trash. All right, so we want to game it out. If we were to make a topside move today, we would first need to get through our own Globex, right? That'd be a great start. Get through the Globex high of 38.35, and then begin working our way back through these pivot miners all the way back up. So we're talking 38.43, 38.51, 38.70. Then it gets into Globex low of yesterday, so 38.85. The Globex open, 3,900. I kind of rubbed that one a little bit. We'll call it 39.11. right? That cog line at 39.11. And then the open of yesterday, the RTH open, 39.20. Globex high, 39.37. And then yesterday's high, 39.50. Now, I've talked about that first 30-minute bump and dump. I've talked about that little move so many times. Hopefully, you guys go back and study this 30-minute flippery. I had a lot of people yesterday tell me, oh, I'm never buying calls again in the first 30 minutes. Oh, I bought all these calls and the market dumped down on my head. Surprise. It's not the idea that you shouldn't buy calls in the first 30 minutes. It's the idea that it's the open, right? We're going to price in a lot of news from the overnight hours. They're going to use MSNBC and those other places to talk things up, rip things into its greatest, highest value right before the open and then dump it down, right? It's market logic like that. But look what we hit, right? We hit that previous day's high before we dumped. So study this whole little bit and get used to the idea that you can actually identify the opportunity for this before it happens. That doesn't mean that you're going to get it right every time. But this is something we've seen before. It's certainly something that we will see again. And it's not much of a shock or a surprise, right? So the way technical analysis works, and hell, the way trading 101 works, we find a edge, we find some behavior that the market does, and we study that behavior and learn how we can exploit it and use it to our own advantage. That'd be one of them. Okay, so we gamed out a topside move. Now, there is always the logic that we could just stay here for the rest of the day. I find that very unlikely, but it is on the table. So we could just go from 38.11, the cog line, up to 38.35 and just kind of maintain that range, wicking up and down outside of it perhaps a little bit and not really do much. I don't want to say that we can't do that because you don't, when it comes to price, using the word can't usually isn't a good idea. So we don't want to say that it can't do that, but I would say I find that scenario very unlikely and that we're very likely going to have some different scenario other than that one. But it is one of the three, right? Okay, so we've talked it over. If that is the theory, then we're just going to want to play range bound trades, right? Sell the high, buy the low, sell the high, buy the low, which works really good anyways in a general market environment. It just doesn't work good when we're, making significant trending moves. So selling the high and buying low is usually my approach anyways. I like it even more when we're just in a very narrow static range like that. The third scenario would be a continuation to the downside. Well, to have that, we need to break through our own Globex low and begin working down through any pivot points. Now, the ones that I'm about to mark out are from over a week ago. And when we get to the volume profile, we can check to see if there's any validity to these, but they're institutional pivot points. So they have that much going for them at least. We got the RTH from Thursday, which lines up really close to the RTH from Wednesday. So it's like a double. And I kind of like it a little more than just having it as a single. There is the Globex from Thursday, kind of like Wednesday into Thursday. Then there is the open from Thursday. Then we've got half the ADR with that red line. And we've got Thursday's low. Pretty good size gap between the ADR and Thursday's low. So the levels that I just marked out are 38.05, 37.97, 37.83, 37.77. Got a A lot of signposts, right? Benchmarks on the way down. And we can add to this, maybe try to fill that gap a little bit by catching the Globex open or the RTH close from Wednesday. And then we've got a full ADR at 37.26. So plenty of pivot points, right? And those are all uh, what we call universal pivots. You can't screw them up. Yesterday's high is yesterday's high, right? There's no argument about that. So you can't accidentally get the wrong spot. It's the highest spot of yesterday. They're universal. You see them, algos see them, experienced traders see them, new traders see them. Everybody can see them, which is a lot different than you sitting there drawing a line and then wondering why price didn't stop at your line. Well, you're the only person that can see it. Nobody cares about your line. We're back to the top of the box. Yay. So when we're outside of the box, we expect price. When we're at the top of the box, we expect to go to the bottom of it. When we're at the bottom of it, we expect to go to the top of it. We are at the top of it. We are coming back inside the box. Point of control is at 37.73, call it 75. For that discussion of a break to the upside, there is some volume resistance over our head. So to get through our own Globex high right now is going to take a significant amount of work. It won't be subtle. It's very likely going to be extreme and tied in with news. So a pretty solid rip is what we would be expecting. It would have to be to get through that volume, right? And then above that, the 39.20 zone has a significant level of volume as well. So a break to the downside, the point of control is always a place where we expect price to have an interaction. It's not a handrail, right? It's the greatest level of support in the last 10 or a greatest level of volume in the last 10 days, but that doesn't necessarily translate into support. So don't lean on it like a handrail, right? Notice the volume profile yesterday. We're looking at a 1-day volume profile, and the point of control is this red line down here. Look at where the greatest amount of volume happened. Now, you could argue that we spent, 2 hours wrapped up right there without really traveling very far in any direction, and that those 2 hours provided the market enough time to present the point of control down at that location. It's not a it's not a wrong argument, but we spent hours up here and we didn't even get a quarter of that volume, right? So there was a very large amount of volume, more volume than anywhere else in the entire chart for yesterday, right? From the time that we opened all the way up until the time that we closed in the 4 o'clock, right? So massive amount of volume there. We can carry forward the value area high from yesterday. I don't know how much weight we want to give that, right? And of course, we would have to travel a long ways just to get back to it. But I would say put that on your pivot list if we don't already have something at 39.05. And if we come over and look, yeah, we got 39.11, right? Because we got a cog line at 39.11 anyways. So I'd probably lean in on that, but it's a value area high. When you're learning volume profiles, they'll tell you it's common practice to carry those value areas forward. Uh, I don't argue against it. I just don't do it personally. All right, so the NASDAQ and the S&P are back above their midnight VWAP. The Russell, too, back above its midnight VWAP, struggling with breaking out of its own Globex high at the moment, which is getting a bit of a rejection. They all are. NASDAQ isn't even back up to that level yet, but the S&P is getting really close. This move in oil is still really concerning. Got to keep your eye on oil today. There's two really big situations going on right now. The whole thing in Europe, right? This whole situation with Christine Lagarde and her whole little group cabal, whatever you want to call them. So that's one thing, and that's really concerning. And then on the other side of it is this whole energy situation. So keep your eye on energy today. Notice the breakup in energy in this move up is actually being seen also in the stock indexes. Now, Bitcoin's not really following through yet this morning with it, but we are back above the VWAP. It's a good place to start. Bonds aren't dropping. They're not really participating in the move. They're not making that exaggerated run to the upside, but they're not falling off yet. We're back below the midnight VWAP. The VIX is responding significantly to this, and yet the dollar ain't doing much of nothing. So just a whole lot of oddity going on right now. Approach with caution, right? Keep your eye on the VIX. The VIX has been a worthless tool for most of the year, and it's not really providing a lot of insight. But we've been talking about the dollar a lot, and as long as we're staying below the 105 in the dollar, then the S&P and the NASDAQ have the capacity to make continued moves to the upside. Yeah, yesterday was kind of rough on the downside move, but the dollar didn't get it back above 105, right? So just kind of keep that in mind. With all of the things that are going on and all of this divergence in these different markets, it's going to be a little tricky to kind of pinpoint where you want to play. But I would continue to make the argument that finance and energy has been the play, right? That's been a good approach. I doubt today will be any different. All right, so looking at the sectors this morning, energy, USO, XOP, the devil's metal, silver, gold is up, bonds are up, and then we start getting below 0.5%. And so we just kind of scroll all the way through those. On the other side, we need at least 0.5% on things that are down, and none of these sectors are down more than 0.5%. Just kind of says a lot. In the EV markets, most of those are down. Tesla's down 0.5%, and seems to be maybe perhaps trying to come up off of those lows. It's got to struggle back through that Globex just like the S&P and the NASDAQ does. We were talking yesterday about patterns in the market, and there is this argument that I think a lot of newer traders miss. If you think about it from the way a lawyer would approach things, right? A lawyer could argue either side of a case. They could argue for or against some kind of action or behavior or situation. It's what they were taught to do in law school. When it comes to technical analysis, a lot of times there's an argument to be made for a long move or a short move. And it's usually where you see posts that say something like, well, Tesla above 700 will go long and Tesla below 690 will go short. Because it's making the case, or it's making the argument that there really is two setups right now being presented, and one of those is a short and one of those is a long. So patterns by themselves are worthless. You have to have context behind the pattern. A head and shoulders for an example, that I identified on Amazon's daily chart this morning is at the low of a range. But a head and shoulders is a bearish pattern. And we would normally not look at a head and shoulders at the bottom of a major range and consider it as a valid, viable signal because it's a bearish pattern at the bottom of a range. So, for all of you newer traders right now that are seeing double bottoms and triple bottoms and these falling wedge patterns, a falling wedge is normally a breaks to the upside, so it's bullish. So double and triple bottoms and falling wedges all pointing to an upside move. Keep in mind the greater context. We're still in a bear market, that in all of the volume yesterday and all of the market breadth, tick trend, AD, U-vol, everything was bearish. So we wouldn't try to take those long signals when every single tool yesterday said go short, don't go long. Kind of keep that in mind. The pattern is the last thing before the trade. It's not the first thing or the only thing. NIO, because of the news going on, is down 5%. It looks like it's trying to stabilize a little bit. They were down 8% this morning. This is all due to a short sellers report. And AMD had a data breach news, which also took a significant gut punch. Doesn't seem to have any contagion, however. These other markets look like they're doing all right. So we got some crypto names that are doing pretty good. PayPal, for an example, is up 0.5% this morning. And as you can see, every single name in the energy list that I have here is up this morning. Now, when it comes to energy, it is worth breaking down the different categories. Yeah, and you know what? Mark just hit it too. He says that the book viewer on the NASDAQ book viewer showed that the bulls were in favor with Amazon, and yet it was still bearish, right? So again, the patterns are the last thing, right? Look at all the data that you got. And in this case, he was mentioning that there was actually data that showed it was bullish, and yet there just was no bullish follow through. But look at as much information as you can before you take a trade, not just one single random chart, right? Which is what especially with futures, I see a lot of future traders do that. They say, well, I'm just trading the ES, and they just sit there and stare at the ES all day. You're trading in isolation. You have absolutely no idea what the hell is going on around you if you don't look at anything other than that one single chart. So at the very least, look at the peers, right? If you're looking at the ES, look at the Russell, look at the NASDAQ, look at something, right? Advancing and declining issues, tick, see tick, something. On Thinkorswim, we got that book map now, right? So, you can use that, even the free version for Apple and Microsoft and the ES futures. The weighted AD, bring in something. Someone told me the other day about this mark percent change. Now, I never thought to use mark percent change in the pre-market because mark is the mid, right? I don't know, maybe the name just threw me off, but if you're on Thinkorswim and you want to know how far the markets are moving in the pre-market, bring up market change percent. Now, it didn't do anything for what I'm looking at here, but these are sectors, right? It would make sense that they're not going to move until 9:30. But say we take something like the Dow Jones, and we load mark change percent or mark percent change. We can see that Disney's up nearly 1% this morning, or that McDonald's is up more than 0.5% this morning, right? So Thinkorswim does have a pre-market change percent. I've been saying forever that it doesn't. Obviously, I'm wrong. I had my own little custom version, but it didn't always work because custom indicators don't always work on Thinkorswim. But this isn't a custom indicator. This is just straight up one of their basics, right? So it's called mark percent change. I don't know why they call it that. And then it works because, obviously mark is the midpoint. And if you go in and you read it, it says in the description, it says the mid between the bid and the ask. What the heck any of that has to do with pre-market change percent? I don't know. Hey, but it works, guys. And that's the only thing we need to know, right? That it works. So if you're on Thinkorswim and you want a pre-market change percent column on your watch lists, it's mark percent change. And that's pretty cool. So thank you. You know who you are. Thank you for pointing that out to us. That's what I got for you guys. Be careful, be safe, and I will see all of you tomorrow. The replay for the Option Omega stream is on YouTube, and it's also pinned in the stock and options channel. So if you want to watch, we did get to the conclusion of the weekly iron mechanical strategy. So you can catch that by looking at the pin in the upper right corner in the stock and options channel, or you can just go to YouTube and search for bullish bears, options, omega, mechanical, any kind of wording like that should pop the video up for you. Careful, everybody.